The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have as our guest today Tim Boss, Financial Cycles Weekly. At our break tomorrow, we will. Let's correct this. That is correct. And on tomorrow, we're going to have Shane Smolian as our guest. And I hope to have Stan Harley on Thursday. So we've got a pretty full schedule this week, and I'm trying to get. Bill Meridian. No, not Bill Meridian. Let me think here just a second here. Arch Crawford on Friday, so we'll see if we can get that. I posted the charts for the DAX and the FTSE, and as you can see, they've been in these real wide trading ranges with big swings. And if you look at them closely, you can see a whole bunch of patterns like three drives, some really nice ABCD patterns along with some cycle work that's in there. But I wanted to take a minute here just to talk about the overall aspects of trading. And when you try to place a trade like we did last week and the Dow Jones that made so much money and we got out of it okay, we could have made a little bit more. But the problem is, folks, these markets are so volatile right now, it's not easy to get into a position and hold it unless you're willing to set with some really horrendous rallies like yesterday. And I wasn't willing to set through that rally yesterday. As we recalled in the newsletter, we closed Friday right on a one standard deviation in the S&P and two standard deviations in the NASDAQ. So it was very oversold coming in, but it still had the possibility of giving up and gapping down, and it didn't do that. And so you had to stand aside. One of the things that I really focus on the service we have 24/7 is the fact that you got to control your risk, folks. I really don't know where these markets are going to go. I mean, if you stop and think about it, it's really silly, because if you think that I know where markets are going to go, you think I know what's going to happen next. And believe me, every time I think of that, I have a picture of Mark Douglas here in the office, and I look over at him and I see and can see it smiling. And as you can absolutely be sure, you don't know what's going to happen next, because anything can happen next, and you don't know what it's going to be. But that's the beauty of what we do here, because we're trying to hit 51%. Mark always used to say, "Be Mr. 51%," and because if you can hit 51% in the major leagues, you're going to be far above Babe Ruth, and no one's ever approached what he did as far as hitting and pitching and other stuff. Anyway, it's that important. So I wanted to spend just a second to talk about some of the things that are on the internet that you hear from everybody else, and they're passed around, and people listen to them as gospel. But hold on a second here. This is the one I wanted to show you here. This comes from Rich Anderson, and this is showing you the analog between central banks and the yield spike, what's been happening with the yield spike, how they're all acting together. Well, we have a G20, folks, and of that G20, the G7s are the big ones, and they're all pumping money into this thing. So, they're just creating money. Now, someday this money might go into inflation. Right now, it hasn't done that. And as a matter of fact, some of the grain markets and stuff look like they are going to, be in a downstand. So hold on just a second here. My beeper is going off, and I need to turn it off. Give me 1 second here, and we will be seeing where we are. Hold on. Okay, let's move on here to the next one here. Okay, got that taken care of. All righty. Yes, sir. No, sir. Let's go. Okay, now here's the next one that I wanted to bring to your attention, which is one of the things coming from the Elliott Wave people. And all I'm showing you stuff that's out there, folks, to show you how cluttered it gets. And I don't use this. All I look for is the patterns that are involved in them. That's all I'm looking at, because you see this bearish indicator here, bullish indicator here. You got to make up your mind what you're going to do. And what I do is when I look at the technical charts, I say, okay, if I buy here and sell here, this is much I have to risk. And so that's what I need to know, and that's what I focus on. So let's do that. Now I want to give you just a little bit of some really good sound advice. Today at 4 p.m., Basil Chapman is going to give his program, an hour and a half, on what the structure of the market, where it is now. Folks, Basil gives these at a time when it's very, very important. I can remember in 2000 when he did one. I remember in 2008 when he did one. And in 2011 when we had the big correction before the big move up. So he does some of the best historical work that you'll ever see, and you won't get it anyplace else. I mean, it really shows comparisons in time, what things have done, and I highly recommend it. It's not very much money, and it'll pay for itself over and over again. I'm sure of that, because I'll be there watching it at 4 o'clock today. No question about that. Okay, now we have one other thing that I wanted to mention, and this is going to be a little lengthy, so I might be able to get it done here on this thing. We'll get it up here for just a second here. I wanted to show you the quick chart on the Bitcoin, because we have potentially made a minor 38% retracement back there at that 41,000, and we've been above 50,000. So that's going to be an important number. But we could also still go down to 40,000. I don't know where it's going to go, folks. I really don't. You people ask me these questions, but I don't trade the cryptocurrencies. All I do is look at the charts, because there's millions of people trading these. It's a 24-hour market, 7 days a week. You don't get that anyplace else but here. So, it's very difficult to trade these, and some of them are suspect, and they might be, but it's in vogue right now, so you got to pay attention to it. In 2000, between 1996 and 2000, the market was looking at a tremendous bull market due to the internet. We changed everything by the internet. The way we did all of our trading, the markets moved from quarters to quarter half in the stock market to decimals and stuff like that. So all that is, extremely important, and you have to pay, close attention to that. I'm wanting to cover just some of the things, because when we come to the break here, I want to spend some serious time here to talk about the bond market, because folks, it's showing some signs of bottoming, but believe me, they're not really that. I mean, this number that we've hit in the bonds is just a tremendous number. We'll go over that again, but we hit that exact 61% retracement within a few points here last week. But the thing is, the open interest in the down move increased dramatically. Boy, that's not a bullish sign, folks, because if people are willing to press as it's going down, that's something very, very important. We hit some major spots, and especially if we take a look at this, I'll just cover this one to start off with. Move it over here is the TLT, and you'll be able to see here that we had a really sort of nice bottom at that 38 level. But boy, if we go below 38, folks, this could get really nasty. And when we get it back from the break, I'm going to show you why it could become nasty, and we'll find out whether that's going to be able to look at that. Mr. S&P saying he'd be happy to buy BTC at might get the chance, Bubba. 877-927-648.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart of the Treasury bonds going back about 5 years. You can see the butterfly pattern that we had back in 2016, 1.618 expansion. The market broke down, had a 38% rally, and then went all the way down to the 1.27 expansion at 136. And from there, we finished the last leg of the bull market starting in 2018. The high of the market actually was in March of 2020 when we hit the 192. That's when there was going to be negative interest rates across the world. You can see the ABCD pattern that was there. We exceeded the 1.618 by about that was almost a point. And then, of course, we broke down. And now we've made the 61% retracement on the downside. That came in at 157. 157, and what we were looking for, if you'll see here on the far right, after it hit that low, folks, we're only up 3 handles. That was as of Friday, 160.28, and we're another handle and a half under that. So that's not an explosive bottom coming off the bottom yet, and I believe that's due to the fact that the open interest increased on those big days down. And that's not a good thing. And since we're talking about increases in open interest, you know, we have open interest dropped dramatically in the NASDAQ yesterday, and also in the Russell. It was up only a few hundred contracts in the S&P. So that was a short covering rally yesterday by any stretch of the imagination. But, you know, these short covering rallies are violent, and they can go a lot farther than you think. So you've got to pay close attention to it. Now, the reason why I'm talking so much about bonds today is because they're at such a critical level, and they really look at that. I'll talk to Mr. Bill. I'll talk about the gold in just a second here. But I want to share with you a chart from one of my best students over in the Far East, and he is a specialist in a lot of different things, but metals and bonds are what his specialty is. And you notice here that this is a long-term chart going back to where we were a few, well, let me see how far we were. Let me see, it wasn't too far away. Goes back about 5 years, and this is where we are. We hit that bottom right there, and he is looking for a rally possibly into that 171 level. I think that could happen easily, but we've got to remember that this is a really long-term bull market, and if this holds, it should really come out of here really strong and go above 171. Now, if we take several weeks to go up to the 382, which would take us up to about the 164 level, 163, then that's going to be the real test. So that's what we're paying very, very close attention to. But we're at major support in these bonds, and they better start acting like they've got support, because the Federal Reserve is pumping a lot of money into this thing, and if it doesn't react, then look out. It could be something really serious to the downside. Now, Mr. Bill is asking, has the gold made a bottom? Mr. Bill, I put an order in today to buy it at 1676. I'm wondering whether I missed the boat. I'm not going to be sure yet. I believe that your gold, your GDX, will make its price today at I believe it comes in at, well, the gold being up, maybe it won't, but we went below 61 yesterday, and 31 yesterday, and the buy was around 30.60 in the GDX. So that'll be it. If I miss the gold today, I'll be buying it this week. I just have to give it a little bit of time. I'm not sure, whether it's going. We were looking, of course, I'll get this up here so you can see that we were looking for it to get on. This is on the 4-hour chart that goes back several months. We were looking for it to get to 17.15. We hit 17.04 last night, and we've rallied up to 17.36, I believe, today. So I'm just waiting to see some type of confirmation. Now, that's all I can tell you looking at it, because I really don't know whether we are going to see one more gap down or not. The low, Duffy was telling me the low yesterday was 30.72. I knew it missed it by just a little bit. So, if you wanted to buy the GDX, I think you could buy that with a 1-point stop. Even if gold makes another low, I think you'd still be safe on that. But I think we're close. But, hey, listen, I miss a lot of these things. That's the main thing that you got to remember. One of the reasons why I posted that chart on the bonds, because it brought a story to me of going back into 1985 when I was trading at Conti. I was trading through Conti, but I was working for Commodity Corporation, and I came back for a week to trade at home, and Byron had came out to visit me, and we were in the Conti office, and they had a special little place there for guys that were visiting, and so we were back there, and I think there were 3 of us in the room, and I had a big position. I had along about 50 bonds for Commodity Corporation, and I was out about $300, and I had my stop in. I didn't want to risk more than $500, and it was about a $20,000 trade, and it went down, and it ticked me right on the absolute low tick, on a quick tick. It went pip, pip, and the market was immediately a half a point higher. And I tell you, I reached in my pocket, and I had some change in my pocket, a couple of quarters and some dimes, and I picked them up, and I threw them down on the floor as hard as I could to bounce against the wall, and they did. The trouble is, one of the coins bounced off the window, and when you're 20 floors up and you break a window at 20 floors up, it's not a $24 replacement. This was 1985. It was $800 to get that window replaced that I had to replace for Conti. But I'll tell you, I always remembered that. But anyway, I ended up buying them $1,000 higher, and it ended up being a good trade. But boy, it was really frustrating to see it get hit on the absolute low tick. And stops are placed for protection, folks. They're not there looking for your stops. I can promise you that, especially if you got a one lot or something like that. They're not after your stops there. So don't even worry about that. So make sure that you do that. Please, if you get a chance, we got Tim Boss coming up here at the break, but if you get a chance, try to listen to Basil today, folks, because it's really going to be a great show, and he's very entertaining. He's got great information, and it's something we can use in times when we have these really volatile markets, and they're certainly going to be continuing to be volatile after, quite a long time. So let's remind ourselves that these markets can do anything they want, and often they do. So just be very, very very careful and always use stops, because if you're not using stops, you're telling the market, I know more than you do, and that is not always the case. So you've got to be very, very careful, especially during these times, folks. This is I think you realize that when you see markets can do what they did on Friday, they look like they were going into the sewer. On Monday, they look like they're going into the sky. I mean, what are you going to do? You got to do something to protect yourself, and that's all you can do. So make sure that you do that. That's the best advice I can give you. I can't tell you where to buy and sell, but I can tell you where you want to get out. That's where you're starting to lose money, and you don't want to lose it. Remember Warren Buffett's things. Rule number one is never lose money, and rule number two is never break rule number one. I think that's what it is. We'll have Tim Boston on at the break. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Tim Bost is in the house.
Hello, sir. How are you this morning?
Well, still living the dream on the green side of the grass, my friend. 37
That's a
degrees
good
here
thing.
in Tucson is very cold, but we're okay. How's your weather down there in
That's
Florida?
chilly. Well, we've been having days in the mid 80s, and typical Florida nonsense we have to deal with here. But we're ready to rock and roll. Got our dancing shoes on, ready to make things happen here.
You're going to talk to us a little bit about the Bitcoin.
A little bit about the bit. Indeed. Let's see here if I can.
One of our listeners is asking if whether you think this is a con game or is it something physically good. What's your opinion, Tim?
So physical, it's not, because it's all imaginary. So it's not physically good. We're asking here whether this is fool's gold or is this the new gold, and I tend more toward the latter opinion myself. Certainly, we've got very, very volatile action in the Bitcoin markets, and that's likely to continue. We're seeing these waves of speculation coming in, especially as more and more mainstream financial institutions reveal the fact that they're putting at least a small portion of their portfolios into Bitcoin. It's gaining greater and greater credibility, and I think for the long run, this is something we dare not ignore. So that's kind of my take on things here. As well, though, we need to remember that, like any volatile markets, it doesn't always just go up. And so be rational about our trading, and that's one of the things we want to pay attention to here, trying to figure out how to trade what we see. And that's kind of the theme for this program, I think. So let's take a look at that. 10 days ago, on the 21st of February, thereabouts, Bitcoin was hitting a high of $58,364 per Bitcoin. That was a new all-time record, and a huge amount of speculative mania going into that. We saw a pretty precipitous drop since that time. And as of just a couple of days ago, on the 27th of February, we saw it hit back down to the range of 43,500. And then earlier this morning, it was trying to poke above 50,000 again, 49,776. And I think we're roughly in that same range right about now. It's a little bit of up and down here so far this morning. But what we're looking at here is a different kind of trading range that we're considering. And in looking at all of this dynamics with the speculation and the rapid market action in Bitcoin, we, of course, like to incorporate some of our astrological studies to try to make sense of all of this. And so with that in mind, one of the hidden factors that we are looking at is the harmonic connection between Mars and Kronos. And this is a very interesting planetary pair to take a look at here, and it has provided us with some pretty solid guidance along the way in terms of understanding what's actually going on with Bitcoin. Now, Mars, of course, is our next-door neighbor in the solar system. It's gotten lots of publicity here over the last week or two with the Mars lander and sending back amazing pictures and all of the perfect landing on Mars, all that kind of stuff. This, of course, is not the first time we visited the planet with our little robots, but it's sending back great information. So it is nearby. And Mars, however, on a symbolic level, is all about taking dramatic action. Mars is named after the ancient god of war. And so the idea is that we want to get things moving, and Mars moves rather rapidly compared to other bodies in the solar system. It has about a 2-year orbital period, a 2-year cycle, so it'll come back to any point in the zodiac once every 2 years, and so we can. It's something that we can backtest fairly readily because of that. Kronos, on the other hand, is one of these weird guys. It's a trans-Neptunian factor, and in fact a Kuiper belt object, which is way outside the orbit of Pluto with that. And it has, in fact, an orbital period of about 522 years. So it's extremely slow moving, and it provides kind of a background rhythm, if you will. But Kronos seems to be associated with extreme highs. And that's one of the reasons we find it very, very applicable to the Bitcoin market. Kronos is about the top floor of the building, or the chief executive, or a new high in the market, anything that goes up. And so we're looking at these patterns then harmonically between Mars, which moves fairly rapidly, and Kronos is kind of a slower moving background factor. Now, longer term, this is what we've done with our Bitcoin charts, and in tracking these lines, the horizontal or diagonal red lines are the positions of Mars, and then the horizontal lines are the positions of Kronos. So what we've seen here over time is that these harmonic implications of Kronos are very, very important. If you look at the lower left there, you can see before all of this took off in late 2017, a Kronos line was providing resistance for the Bitcoin market, and then, of course, broke through that first harmonic heavier purple line across the middle of the chart. That was the first harmonic Kronos line on its way upward in the big zoom up right at the end of 2017. After it broke back below that first harmonic Kronos line provided consistent resistance, and so later this past year, back in December, when it began to break out from that as a base, it really caught our attention then with that. So these are some of the underlying patterns that we're looking at longer term with Bitcoin, and certainly that Kronos Mars dynamic gives us a lot of information. So the 8 harmonic dynamics between Mars and Kronos can help us project more specific support and resistance levels, and that's one of the things that we're looking at currently here. This is a current, yes.
Tim, we have a question from one of our listeners, and it's on my mind too. You know, when we look at our rankings of the Timer Digest, you know, of the top 10, 5 of them always are astrologers. You know, you were in there, and Arch Crawford's been in there, and there's so many of them I can't think of them off. Bill Meridian was in there. I mean, there were 5 of them. Barry Rose. I mean, a lot of 5 of the top 10. So there's a lot of credence to this, and the Foundation for the Study of Cycles supports that. But why is it that this old cowboy's never heard of this Kronos and Mars stuff? I've never done any of those trans-Neptunian things, and can you explain the difference between trans-Neptunian and the classical astrologer stuff?
Sure. Yeah. Let's take a minute and dig into that, because I think it's an important understanding here. Throughout the history of astrology, we've known about it for at least 5,000 years or so, give or take a little change there. And during that time, for most of the time, we were dealing with only those planets that could be seen with the naked eye. This is pre the advanced technology of telescopes, which came along with Galileo a couple hundred years ago. So basically, we were dealing with the sun and the moon, Mercury, Mars, Venus, Jupiter, and Saturn. And so those 7 planetary bodies were what astrology was built on for literally thousands of years. And most of our understanding of how things work was based on that. So
we got to pay a few bills.
We'll dig into it after the break.
That's very interesting. Please, we'll be right back with Tim Boss, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, talking with Tim Bost at Financial Cycles Weekly, and we're talking about the Mars and Chronos trans-Neptunian aspects.
Right, and we were delving into ancient history, which was a good time to take a break. So,
Go ahead, Tim.
We tend to get a little erudite from time to time. At any rate, we had all of the major planets out through Saturn known to the ancients in astrology. That's what astrology was really founded on. Back in the late 1700s, we had the discovery, thanks to the use of telescopes, of the planet Uranus. And then about 100 years later, the discovery of Neptune. And back in 1930, about 90 years ago or change, we had the discovery of Pluto. And so astrology adapted to all of this knowledge of these additional planets as they were discovered. Astrologers work with symbolic meanings largely, but they also are keen to observe what's happening in the cosmos. About 100 years ago, we had a fellow named Alfred Witte in Germany who figured that there must be more planets that we hadn't discovered yet. And he came up with his projections of the orbits of these planets. We refer to these as the trans-Neptunian factors because at that time, the outermost known planet was Neptune. So these are trans-Neptune. They go beyond the orbit of Neptune. We hadn't discovered Pluto yet. And so what we have discovered since about 20 years ago with our space telescopes is that there's a whole bunch of stuff out there in the outer realm of the solar system, lots of little rocks that we refer to as the Kuiper Belt. That's Kuiper, Kuiper Belt objects. And so it turns out that the planets, the trans-Neptunian factors that were postulated by Witte 100 years ago actually match up pretty well with a lot of these little Kuiper Belt objects. And so we're going back to Witte's work and tracking his orbits and projections for these planets. There are a group of astrologers who refer to as kind of the Uranian school of astrology. And thanks to the good advice of my friend Bill Meridian, he suggested some years ago to me that you need to take a serious look at this, especially in terms of financial charts. And so I've been working with that ever since and finding it more and more valuable. So what happens is this. What we're looking at is a fast-moving planet, Mars, and that gives us lots of short-term fluctuations in the markets. but we compare that with a much slower moving body. And we can take Saturn, for example. This is about a 30-year orbit. This is one of the factors that W.D. Gann used a great deal in his work. Or we can go even farther out, so to speak, and use these trans-Neptunian factors. And I've discovered that the particular factor Chronos is very, very applicable to a couple of things. One is Bitcoin, and then also with gold. With Bitcoin, we're using Mars and Chronos. With gold, we use the Sun and Chronos to do our price projections. And they hold up pretty well. So it's still experimental, but we like to share our experiments.
Well, this is really good, really interesting stuff, Tim. Thank you very much. You want to go ahead and continue then with the rest of your slides?
Sure, yeah. So what's going on here? This particular chart, we put on the price from a little earlier this morning. There in the middle of the chart, $48,742. I think it may be $1,000 higher than that right now, so it'll fluctuate. But just to kind of put this in perspective, and of course, these are based on daily closes with Bitcoin. The market never actually closes, but we take a snapshot, and so these are our price projections or our price history based on that. As you can see, we made that high around the 21st of February at 58,000 and change, and since that time we've been in a bit of retreat. And so this is what we're looking at. What does this mean to us in terms of Bitcoin? Where should we be positioning things? There are lots of folks that have jumped into this market very hastily without much knowledge of Bitcoin or of trading, because there's that big FOMO thing, the fear of missing out. And so it's generated a lot of action on that basis. That's what has been driving the price up here.
Wow, this is really interesting stuff.
Yeah, but what we're seeing right now, of course, is a pullback. And this is one of the things, one of the recent times you and I talked, we were comparing this to the tulip bulb market a couple hundred years ago and saying this ain't that, because we are definitely seeing a more mature market with pullbacks and support and resistance factors that we need to take into consideration. So what we're looking at right now are these support and resistance zones that are all based on the planetary positions of Chronos. And we're looking at this in 8th harmonic increments. And so we're adding $4,500 to each measure there to get our zones that we're watching with Bitcoin. And you can see it holds up fairly well. Right now, we are working very, very actively with that resistance zone that kicks in at $50,730. And so we're making another effort to stab back above that. Recently, it tested that and it failed. So the more active that becomes, of course, based on our rules of technical analysis, the stronger the resistance becomes. But we're also right now watching those support zones, because this can give us an anticipation of where there might be buying points for the longer term. And we're looking at these as pullbacks, as buying opportunities, really, at this particular point. So that's a part of what we're looking at there. Our projection at this point, based on these Chronos indicators, is that we'll get more positive action coming. Now, during the course of this year, we're looking at these 8th harmonic alignments between Mars and Chronos. February 26th, last Friday, we had the first one that occurred, and that's when we began to see a little short-term rebound in Bitcoin. As you recall, we were looking at our chart earlier and said that on the 26th, 27th of February, we had that low at about 4,500. 43,500, and then since that time it's moved back up. We're watching next the conjunction coming up on May 13th as another inflection point, and then we have dates in July, October, and December as well. When we talk about these 8th harmonic alignments, it's not happening every day, but it gives us some anticipation of potential trigger points in the markets. Based on our back testing, then what we are seeing here with the Chronos situation is that we can anticipate an upward trend coming out of that, and so that's one of the things that we keep an eye on with that. So based on that, then we are anticipating an additional rally, but we also look at other models as well. Oh, here's our back test with that particular Mars Chronos 8th harmonic. Typically, and that zero date would be be the February 26th date, so we're looking for a move upward into the equinox on March the 20th. So based on this model, we're looking at an imminent rally, another leg upward at this point. However, we also have other work that we do, and sometimes the stuff doesn't agree. So here's a cycle projection I was working on yesterday to try to analyze the cyclic work with Bitcoin. And again, we've got just about 10 years of trading history, so it's not a lot. But this is what our cycle pattern looks like there. Instead of a move upward, we're looking for a decline into the 29th of March. And so we'll see what actually plays out there.
Wow. Tim, you are a master at this, and we love having you on. We're going to have you again in 2 weeks, and thank you so much. This is such an interesting thing. Financial Cycles Weekly. Do you have any webinars coming up, Tim?
We do indeed. Go to bit.ly/Tim.
Let's cover that after we pay a few bills, okay?
Okay, no problem.
Okay, thank you.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Tim Boston. You've got a webinar coming up, one of our favorites.
We do indeed. Yes, indeed. Let's get that page up here. Go to bit.ly/Tim Larry P. Everything's lowercase except for the initials, T, L, and P. Make those uppercase, and that'll get you to a special link that'll give you access on a premier basis to our next free webinar, which we've got coming up a little later this week. And so we'll be sharing the information on that. We'll be talking about what's working now in Astro trading, so you can get an overall update on the situation there. And of course, your questions and comments about Bitcoin, metals, the markets in general, and anything are welcome during that session. So we try to make those interactive. So that's a good place to get the lowdown and find out how you get even more information after that.
Oh, this is great, Tim. Thank you very much for being our guest. It's
very, very welcome.
It's such good information, and you're a really good presenter, and we want to thank you very much for being on. We'll have you on again soon, and be safe down there in Florida. I hear the real estate's going up about 10% a day. Is that about right?
Yeah, it's almost like Bitcoin, so.
Maybe they're related.
That's right. So, yeah. Anyway, at least you can plant tulips on the real estate, right?
Can you tell the folks again how they could reach you or their email?
Sure, tim@timbost.com. I've been having some problems with email here this morning, but typically that does work. tim@timbost.com. And that will get you a direct connection there. I'm also started hanging out on this new app called Clubhouse. If you're not on Clubhouse, join me there. And you go to join. That is a new audio-only social media app, and it's very interesting. People get together and talk about Bitcoin and the markets and astrology and everything else. I'm on there 2 or 3 times a week and having informal chats. It's a good way to have an in-depth conversation. So go to joinclubhouse.com. And you can sign up there. It's kind of a waiting list thing by invitation. Do a search for me, Tim Bost, there, and I'll give you an invite.
Hey, thank you very much, Tim. We'll be back. You bet. We'll be back tomorrow, folks. 877-927-6648. Don't miss Basil's show tonight.